Thanks very much for joining us on India Business Hour. I'm Shireen Bhan. Let's go straight to the top story this evening. India trusts its private sector, take more risk, and that was the unequivocal message that came in from Prime Minister Modi, who spoke at the annual meeting of the industry body, the Confederation of Indian Industry. In a speech that lasted about 20 minutes, the Prime Minister said that relationship between government and the private sector has become deeper and stronger. He also termed unicorns as the identity of a new India. The Prime Minister said India now has 60 companies that can call themselves unicorns, and 21 of these have got that tag in just the last few months. The Prime Minister also touted the recent decision by the government to do away with the retrospective taxation, saying it will strengthen confidence of investors even further. Prime Minister Modi has called on industry to increase its risk appetite and invest more in research and development. Listen in.
सब मुश्किल फैसले आज मुमकिन हो रहे हैं क्योंकि देश अपने प्राइवेट सेक्टर पर, आप सभी पर भरोसा करता है। जैसे जैसे इन एरियाज में हमारी कंपनियां सक्रिय होगी, इनमें संभावनाओं का विस्तार होगा। सिर्फ एक पहिए से गाड़ी नहीं चल सकती, सारे पहिए ठीक से चलने चाहिए। इसलिए इंडस्ट्री को भी रिस्क लेने की अपनी नेचुरल टेंडेंसी को थोड़ा सा और बढ़ाना होगा। इंडस्ट्री की एक सक्रिय भूमिका बहुत जरूरी है। विशेष रूप से रिसर्च एंड डेवलपमेंट पर इन्वेस्टमेंट को लेकर हमें बहुत गंभीरता से काम करना है। आत्मनिर्भर भारत के लिए R&D पर हमारा इन्वेस्टमेंट हमें कई गुना बढ़ाना होगा, और ये सिर्फ सरकारी प्रयासों से ही संभव नहीं है।
Well, that is the Prime Minister speaking at the Confederation of Indian Industry. Joining us now is the President of the CII, TV Narendran. Mr. Narendran, always a pleasure. Many thanks for joining us. Well, that's a very clear message coming in from the Prime Minister that we understand the contribution of private industry, but private industry needs to step up and do more, take more risks. The question, though, is that is industry poised now to make more investments? Given where we stand in terms of capacity utilization as well as demand visibility, what's the outlook on investment, which is what the Prime Minister seems to be alluding at?
Thanks, Shireen, for having me on the show. I think, yes, it was obviously a speech exhorting industry to invest more, take more risks. The Prime Minister said that the government is taking political risks to take tough calls and wanted industry to follow suit and take risks. I think fundamentally, if I look at industry, there are some sectors which are doing well and have announced investments. For instance, the metals and mining space, metals particularly, is an area where you're seeing investment announcements and it's going to play out over the next year or two. But there are some sectors of industry who are still struggling, particularly the services sector, the high contact businesses. So it's a mixed bag, but I think those in the industry who are doing well, who have high capacity utilizations, good profitability, good demand, are certainly announcing investments. And I do think that over the next few quarters, you'll see more and more such announcements.
Yes, you're saying that a full revival as far as investment is concerned is still a full quarters away. What we are seeing, of course, is patchy at this point in time. But let me address the other issue that the Prime Minister raised. And he said that, look, we're open to taking tough calls. We're open to taking tough decisions. Doing away with the retrospective tax is one of those decisions that the Prime Minister spoke of. And he's asked industry for suggestions and feedback on what more the government needs to do. What would you prioritize as part of the to-do list?
You know, one of the things which keeps coming back and which gets addressed through these actions on the retrospective taxes, policy stability and policy consistency. I think this comes back to us not only from our members, but also from overseas investors. You know, they say we can deal with higher costs as long as there's policy stability. And I think the government has taken a big step towards that by, in some sense, indicating that they will not have a retrospective tax kind of law in future, or rather there will be more policy stability and consistency. The second part, which is sometimes more to do with the state governments, is also to do with honoring contracts. I think that also came up today when we were discussing with the Prime Minister that we need to honor contracts that have been signed. And that's important as well, because when you're looking at private sector investment, foreign investment. They look at contractual integrity as well. So these are areas which will help us get more investments into India. We are looking at infrastructure investments, which are typically long-term investments, and policy stability and contractual integrity are very important parts of that.
Speaking about one of the areas where the Prime Minister believes that collaboration with the private sector is necessary, and we've seen that play out during the COVID crisis, specifically on vaccines. Now, CII has signed an agreement with Serum Institute, but there isn't enough detail or clarity on what the eventual procurement plan will be. So if you can share with us what that agreement will eventually lead to in terms of doses being bought and doses being administered.
Sure. So, Shireen, I think there are a couple of things which private sector can do and will do, and CII is leading that activity. One is to deal with vaccine hesitancy, because even now in tier 2, tier 3 cities in the interiors, there is vaccine hesitancy, and CII and its members are doing a lot of work to address that. That's one thing. The second part is more of feedback from the government that the private sector has not stepped up vaccination, stepped up or kept its promise of buying vaccines and vaccinating people. And I think that's the area which, again, CII is working on. What we said today to the Prime Minister as well is that we've already done about 500 camps. We've already vaccinated, CII and its members have vaccinated about 4 million people. But what we want to do is to keep increasing the number of vaccination camps, do these camps in the more remote parts of the country where there's no easy access to vaccines, work with the local governments, and basically take vaccination to the interiors, to the communities around the places that our members operate in, and try to get more people vaccinated. So in that context, we've signed an MOU with Serum Institute so that our members can avail of some special facilities from Serum Institute in terms of you buy a certain number of vaccines, you get something more from them. So these are the terms that have been agreed to with Serum Institute, and depending on the number of vaccines that you buy from them, you get some incentives. So that's what is happening. CII is working with its members to roll out these vaccination camps. Vaccination, is a very big initiative for us. And so we're working with the government to make sure that the private sector steps up and plays a bigger role in vaccination.
In the reform to-do list, I want to address what we heard from the Revenue Secretary as far as GST rate rationalization is concerned. What do you take away from that? What's the expectation that industry has? Do you believe that we are going to see anything meaningful on that front?
I think the expectation or the request from industry has always been to have fewer rates, have a simplified structure. More recently, we had even suggested temporarily if there could be a reduction in GST rates for consumer goods and products which make up the daily purchases of the common man, so that that will help them tide through this crisis. Because one thing we've seen is individual savings have dropped. People have spent more on medical expenses than they planned to. So how can we get consumption back by making it cheaper for people to buy what they buy day in and day out? So those are some of the suggestions that we had, which is not a permanent change but temporary. But a more permanent change would be about simplifying structures. We've also talked about bringing petroleum products into it. We've also talked about giving some relief to the aviation sector. So I think if some of these are taken on board, that will surely help in the revival.
Speaking of revival, what is the sense that you get after having spoken with members at CII in terms of the strength of the revival and the recovery that we're currently witnessing? Which are the sectors that continue to be most vulnerable? What does this now mean in terms of hiring, etc.? What should we realistically expect over the next few months?
So even if you look at the PMI data, right, the PMI for manufacturing is positive, that is 50 plus, and for services is still below 50. So obviously the services sector is taking longer to recover. The second part we were watchful about is what is the recovery in the rural economy. And I think things are getting better in the rural economy. And I think, the monsoons have caught up wherever they were short, and that's positive for us. Across sectors, like I said, chemicals, metals, etc., positive. High contact sectors like aviation, hospitality, not so great yet. Consumer goods suffering a bit because of the fact that household savings have dropped. So it's a bit of a mixed bag, but overall, I'm seeing commodity-linked sectors doing better. Also, you can see the IT companies starting to do better. Anyone who's exporting can do better because most parts of the world are recovering quite well, at least the developed world. So when we did the poll in the CII last National Council, I think we saw more optimism than there was before. There was confidence that this recovery will be quicker. There was some concern about the impact in the rural economy, which I think as the weeks go by is, getting mitigated.
So finally, Mr. Narendran, in light of what we've heard from the Prime Minister today and all the other secretaries who've also spoken at the CII, whether it's on privatization, asset monetization, and so on and so forth, what do you believe could be the next sort of big inflection point in this story as we move forward?
I think, one important message to private sector since last year is that private sector is a very important part of India's growth story. Private sector should be trusted, will be seen as a partner in progress. And I think that's important to hear so that the government looks at the private sector as a partner and is willing to listen to the private sector and do things together. I think that's a very big positive. Secondly, if you want the investment cycle to come back in private sector, and I think that's been a complaint from the government, because most of the investments have been by public sector, you need demand and profitability to come back and deleveraging to happen, because most of the private sector investment over the last 10 years has been in capital intensive sectors like power, metals, etc. So I think we're starting to see that highly leveraged balance sheets are getting deleveraged. We're seeing profitability come back. We're seeing demand come back as well. So I think things are moving in place for private sector investments to come back. And as I said, some sectors, particularly metals and chemicals, have already announced investments. So which is positive. And I think the others will follow. And we hope that the third quarter and fourth quarter will get better. And the GST numbers are also positive and many other lead indicators look good.
Well, let's hope that, yes, we do see this recovery continue. Many thanks, TV Narendran, for joining us and taking us through what industry made of the Prime Minister's address to the Confederation of Indian Industry. Appreciate your time. Well, staying with what was said at the CII event, Revenue Secretary Tarun Bajaj hinted at a host of issues that are likely to be discussed in the next GST Council meeting. In fact, he was also speaking there at the annual summit. He said that the Council could discuss tax rate, duty structure, and may even look at bringing some of the items out of exemption. He also assured industry of a stable tax regime with no calls from the Revenue Department, asking them to pay up. Take a look.
The revenue neutral rate of the GST was about 15.6%, while the current rate is about 11.4 or 11.5%, which the Reserve Bank of India in a study has told us. So the rates have actually come down at a macro level. Yes, in a few sectors, they may have gone up, but we have to look at solutions to bring down the rates, which are very high, and take out certain items which are under exempted items, inverted duty structures. So we need to do that. And I'm sure in the coming GST Council meetings, when we give this agenda, I'm sure we'll be able to get those things.
Well, that is Revenue Secretary Tarun Bajaj. Now, after scrapping the retrospective tax law last week, the centre is looking to settle all such disputes. Sources tell CNBC TV18 the government is likely to approach 17 of those companies that are likely to be impacted by this. My colleague Timsy Jaipuri is standing by with the details. Timsy, what is the plan in terms of the outreach by the government to try and settle these outstanding legal disputes?
Well, that's right. What sources are indicating to CNBC TV18 is that the government is likely to approach the 17 companies which will see a relief due to the recent retrospective tax amendment that government has taken. Now, government, what we are learning is that government is wanting to write to these companies to begin informal talks so that these companies can begin assessment of their dues and settle the legacy disputes. Remember, Parliament recently cleared the amendments to Income Tax Act 1961, ending retrospective tax cases. The bill proposes that no tax demand shall be raised in future on the basis of the said retrospective amendment, where the bill also proposes that wherever tax money has been collected can be returned, but only without any interest, penalty, penalty or damages provided litigation is withdrawn at all legal forums. So both government and these companies can start withdrawing their litigation processes at various legal forums belonging in India and abroad to initiate action on this particular bill, because this means the government would be returning about 8,100 crore rupees of retrospective tax money collected so far, majority being 7,900 crore rupees due to Cain Energy and 45 crores to Vodafone. So let's see how soon these talks or these communication begin so that a relief can be extended to both Cain Energy and Vodafone. Back to you.
Timsy, many thanks for joining us. Now, Vodafone Idea has filed a review petition against the Supreme Court ruling on the 23rd. That judgment had dismissed the telecom company's request to rectify the arithmetical errors in the AGR due calculation. The ruling has come as a setback for the telecom companies, but more so for the cash-strapped Vodafone Idea specifically. So this is going to be something to watch out for. On to the day's trading action. After seeing a very strong opening, Indian equities saw some sharp cuts. However, by the end of the session, they did manage to recover from the intraday lows and closed flat. The Sensex and the Nifty ended the day almost unchanged. Well, less than a month after going public, Zomato has reported its earnings. The revenue has seen a significant jump at over 800 crore rupees and has also beat expectations, but net loss has widened to 360 crores. But the stock ended the day higher as investors remain impressed by the strong growth in the gross order value. Professor of Finance at the New York University and an expert on valuations, Ashwath Damodaran believes that Zomato is overpriced at 130 rupees a share, even after accounting for all the assumptions of the optimists. Take a look.
I think the first thing we need to do with these companies is stay away from metrics which scale to current earnings, current revenues. No matter what I think about Zomato or any other startup, whether it's Airbnb or Ola or Uber, scaling to current metrics are always going to give you absurd numbers. Why? Because you're buying for the future. You're not buying what's there right now. You're buying on potential, you're buying on hope, and there's nothing wrong with doing that. The question is your potential or hope within reason? Or are you just making up stuff? And investing has to be a personal decision. And from that perspective, that's what troubles me about Zomato, is that things that need to happen to justify the price, I just don't see as plausible. So it drives my decision.
Well, that's Ashwath Damodaran there on the IPOs slated from the new age tech companies. A quick break, but when we return, at least 10 people are dead and dozens feared trapped in debris after a landslide on a crucial highway in Kinnaur in Himachal Pradesh. That and more when we get back. Well, here are some of the other corporate headlines tonight. ITC held its 110th annual general meeting today. Speaking to shareholders, Chairman and Managing Director Sanjeev Puri said the company will focus on developing digital capabilities and sustainability in the years ahead. Towards that goal, ITC will invest in digital technologies and create innovative business models. This will include the implementation of Industry 4.0 in manufacturing, which refers to a focus on automation and machine learning. L&T is selling its hydropower plant in Uttaranchal and solar projects in Telangana to Renew Power Services for nearly 1,000 crore rupees. The transaction is expected to be closed before the 30th of September. The Reserve Bank of India has trained its guns on banks over non-availability of cash in ATMs. Starting from the 1st of October, a penalty of 10,000 rupees will be charged to banks for each ATM that remains out of cash for more than 10 hours a month. The central bank has observed that non-availability of cash causes inconvenience to the public. Let's now talk about the latest on the COVID data. Fresh infections rose to over 38,000 as the impact of the weekend dip in detections wore off. However, with more than 40,000 recoveries, active cases continue to drop for the third day in a row. The number of COVID deaths has risen by 497, pushing the official death count to over 4.29 lakh. And on the vaccination front, over 41.9 lakh doses have been administered as of 7 p.m. today. Yesterday's tally stood at 41.4 lakh doses, lower than the 54.9 lakh doses given the previous day. As things currently stand, India has administered 52 crore doses so far, and over 31% people have received at least one dose of the vaccine. The drug regulator, the DCGI, has allowed the Christian Medical College Vellore in Tamil Nadu to conduct a study on mixing Covishield and Covaxin doses. Remember, the government's apex medical body, the ICMR, also conducted a study on mixing and matching of vaccines. It was done after 18 people in UP were administered doses of Covishield followed by Covaxin. That study showed that mixing of vaccine doses elicited better immune response. And further relaxations being announced in Maharashtra. Shopping malls have been allowed to remain open till 10 p.m. Only those vaccinated with both doses will be allowed in. Restaurants will be allowed to remain open till 10 p.m. as well with 50% capacity. So that's big relief coming in. The Andhra Pradesh government has told the centre that some COVID patients who were on ventilator support lost their lives because of low oxygen pressure. This is the first time that the state has accepted deaths due to oxygen shortage. The centre had recently asked states for data on deaths in connection with oxygen shortage during the COVID-19 second wave. At least 10 people are dead and dozens feared trapped in debris after a landslide on a crucial highway in Kinnaur in Himachal Pradesh. A bus, a truck are among the 4 vehicles trapped in the rubble. Rescue operations are currently underway. And with that, it is time for us to wrap up this edition of India Business Hour. From all of us here on the team, goodbye. Many thanks for watching. Do stay tuned to CNBC TV 18. The news will continue.